Hello, and welcome to Virtual Investor Conferences. My name is Matt Lateplo, and on behalf of OTC Markets, as well as our co-host Skyline Corporate Communications, we're very pleased you have joined us for our next live presentation from SusGlobal Energy Corp. Before I introduce our speaker, a few points to note. Please submit your questions in the question box to the left of the slides. If you are interested in scheduling a meeting with SusGlobal Energy, please click on the Meetings tab found on the left navigation bar. You'll be able to view the company's availability and submit a meeting request. On a final note, all of today's presentations will be recorded and available for 24/7 replay. At this point, I'm very pleased to welcome Mark Hazut, Chairman, President, and CEO of SusGlobal Energy Corp., which trades on the OTCQB venture market under the symbol SNRG. Welcome, Mark.
Thank you. Good afternoon, and thank you for joining the SusGlobal presentation today. I'm going to spend half the time going through the model and some of the slides, and I'll allow for the other half of the presentation to respond to questions. So if for those that don't know what SusGlobal does, we are a renewables company. We take large volumes of organic waste from municipalities through municipal contracts and also industrial commercial contracts with hauling companies. We process them in our processing facilities to produce regenerative products as part of our whole circular economy model. So this brings innovation and sustainable methods of processing organic waste, which for centuries have been going to landfill. Now, as part of the whole climate change initiative, we have to divert these organic waste streams from landfill and reduce greenhouse gas emissions. This is our objective. So what we do is we take the organic waste streams, they come to our, we have strategically placed processing facilities, usually in the eastern part and the western part of the state or the province. What this allows us to do, and anywhere between 200 and 250 kilometers apart, which then reduces the carbon footprint of trucking and transportation, certainly an important aspect with the increase in fuel charges. We take these organic waste streams, they're diverted from landfill, and we produce now predominantly fertilizers, so either a dry compost or liquid fertilizer in our proprietary processes. There is in the future plans to also process organic waste in order to produce other renewables such as RNG, renewable natural gas. Now, in terms of the revenue streams that the company, there are three types of revenue streams that the company, the objective is to first, we have a tipping fee that we charge municipalities or the haulers. And then, of course, the second revenue stream is the sale of the products, either the fertilizers, of course, and both compost and liquid fertilizer. And the last revenue stream is the monetization of the carbon credits. And this is from the diversion program. So we have last quarter actually monetized carbon credits. This is done through a third party, and our facilities are registered on a registry. They're now registered on the Greenhouse GHG Clean Projects Registry, and we market and sell those carbon credits, what's known as VERs, Verified Emission Reduction Credits. Now, going to the key investment highlights of the company. Again, we were chosen as one of 39 global leaders by Citra, part of the World Circular Economy Forum, as one of 39 global leaders in in terms of circular economy and producing regenerative products. You know, we have the ideal model. We take municipal organic waste and we turn it into these regenerative products. Again, this is, and then the products, of course, the fertilizer industry is a $200 billion marketplace annually. And now there's a subset to that marketplace. That's the organic fertilizer market. That's going to get a CAGR of over 11% to $20 billion. And our products are certified organic. We don't use biosolids or manures. Strictly food scraps from the green bin program, from the what's known as source separated organics (SSO) from municipal contracts. Now, the idea in our case, where we own the real estate and the licenses that are issued by the Ministry of the Environment, that allows us to process these large volumes. We own the real estate, and that's really important. There's significant intrinsic value in those licenses. Those licenses stay with the real estate. They stay with the site. So we have a significant competitive advantage with regards to having those licenses. And again, these multiple revenue streams are important to us. Certainly now, with the monetization of the carbon credits, it's all part of our model to divert from landfill as part of the whole climate change initiative. For example, at COP, one of the topics that's always discussed is organics going to landfill. That creates a significant amount of GHG, greenhouse gas emissions. And if you're serious about climate change, you have to reduce that. And our model, we have the infrastructure to take in those organic waste streams and divert from the landfill in order to monetize, in our case, monetize the carbon credits and sold to other companies that are trying to offset their own carbon emissions. So we have large capacity at our facilities. So one facility is a 49-acre facility that we own outright. It has an environmental compliance approval license for 120,000 metric tons per annum. The second facility, it's on 3.5 acres. That has a environmental compliance approval license for 65,000 metric tons per annum. So you have a total of 185,000 metric tons per annum of organic waste processing capacity within 250 kilometers. And in the middle, you have one of the highest densities of population, the GTHA, Greater Toronto Hamilton area. And we draw in from that population, over 15 million. So this is the advantage we have, and this model can be repeated again in other states, other provinces. But I want to highlight the fact that we own the real estate. This is very important because these licenses, they stay with the site, and there's significant intrinsic value to that real estate. When eventually legislation will be passed to ban organics from landfill, these licenses will be extremely valuable. And now in our province, the Ministry of Environment is not issuing any more of these licenses. So the capacity now is limited to our infrastructure, and we look forward to that ban. Ultimately, our infrastructure will go to capacity. So in terms of the revenue streams, also other than the first three that I mentioned, there are other global licensing partnerships with regards to our fermentation process and being able to have fermentation units on site at, for example, organic blueberry farms that are looking to take their organic waste and produce our proprietary liquid fertilizer on site. And that would allow us a recurring revenue model, because we would sell them not just the unit itself, but the enzymes that are required to produce the final product. If looking at the equity highlights for the company, last year we were as high as an $80 million market cap. We're now about a $25 million market cap. We're not surprised because of the marketplace, but we do believe the company obviously fundamentally is in a better place than it was last July, when we were late July, we were an $80 million market cap. We're looking at those values again, certainly with the monetization of carbon credits and what we expect to achieve in the next 12 months, which includes a listing to the NASDAQ. We did file a registration statement, an S1, last year, received 2 comments, and subsequently filed an amended S1 and received no comments, ready to uplist. So the plan is now to file our year-end 10K on March 31st, and subsequent to that, file an S1, amended S1 registration statement with our underwriters for an underwriting of close to $15 million US. And the use of proceeds is to complete our second facility, the Hamilton facility, in order to commercialize our proprietary award-winning liquid fertilizer to go, from producing 30,000 liters per month to 50,000 liters per day. Eventually, when we begin to process there and produce the liquid fertilizer, we'll have a run rate of $100 million run rate in terms of revenue. We're obviously excited about getting that done. And then the other half of the proceeds from the underwriting will go to an accretive acquisition. This is one that we've discussed before that have significant amount of IP. And SusGlobal has chosen the NASDAQ as the marketplace to uplist to, because we consider ourselves a biotech company. We are an environmental, industrial, and aquaculture biotech company. We're embarking on a very robust IP strategy. Again, these fertilizers are very important. There's a demand for fertilizers worldwide. And the more you use these biofertilizers, one of the best ways to meet, in terms of climate change initiative, is soil sequestration. So the more you use these fertilizers, the better the final products, and obviously the wherever agriculture is used, you get better products. So we're excited about the demand also for fertilizer worldwide. Obviously, conflict in parts of Eastern Europe is causing a significant amount of pressure on food supply and organic and fertilizer supply. Russia and Belarus being the number one, number two, and number three potash producers after Canada being number one. There's a shortage of fertilizers. We don't have an issue with the supply chain. We have a significant amount of foods, the feedstock and all the food scraps from the green bin program. And that's why, for example, our assumptions at the Hamilton plant, once it begins processing, it is only 12,000 metric tons per annum to produce 50,000 liters per day of our organic liquid fertilizer. Then that represents only 18% of our capacity under the environmental compliance license of 65,000 metric tons per annum. But as the demand comes in for the product, for fertilizer, because it's a scalable fermentation unit, we can just add more fermentation units. Each unit can process 10 tons per day to produce 10,000 liters. So it's a market where there's a significant amount of demand, and these are organic fertilizers. So they are sold to either agriculture, big box retailers, etc. Again, our facilities, we have two facilities that we own. We believe that the marketplace is not reflecting the true intrinsic value of our real estate. I mean, we've been offered more than twice our market cap today for one of our facilities. So there's no doubt that once legislation is passed to ban organics to landfill, that everyone will be scrambling to find infrastructure to send these waste streams to. So it's important. Again, our model: we own the real estate, we own the environmental compliance licenses, we take in the organic waste streams to our infrastructure as part of our circular economy model and diversion from landfill to reduce greenhouse gas emissions as part of climate change initiative, and produce these regenerative products. Whether it's the present fertilizers, both a dry compost through our aerobic technology, or a liquid fertilizer through a fermentation process. And then later, we are looking to consider other renewables. So the intrinsic licenses are very valuable, and that's and in the next 12 months, as we uplist and execute on the plan and begin processing at the second facility, commercializing the liquid fertilizer, we expect the revenues to grow incrementally now until the Hamilton facility is online. And also with the accretive acquisition, there's also we'll be able to consolidate those revenues. So we're about halfway through. I see some questions, so I'll begin to answer some of these questions. I have the estimated earning per share once the $100 million in revenue begins. Again, our model is very high margin. The assumptions are available for those that are interested. But producing 50,000 liters a day of any products is great, but you have to make certain you have a home for it. And there's a significant demand for fertilizers. And I think the earnings per share can be quite significant because the margins are high. Again, we're paid a tipping fee to take in the feedstock, and that's important to note. And then, of course, the sale of the product. So the product retails for, in terms of the liquid fertilizer, it retails for $39 a liter. We wholesale it for 10 to 12. That's in bulk to agriculture in 1,000-liter vats. And of course, it costs us about $3 per liter, including packaging. The next question is with regards to our government imposing carbon tax on fertilizer. Well, first, our government plans on by 2030, carbon credits will be $150 per ton. Right now, we're getting anywhere between $7.50 and $12 per ton. And they anticipate that to go to $150 per ton. Now, that would be quite significant for us. But if there is ultimately a complete ban of organics to landfill, they'll probably reduce the carbon credits or probably eliminate them. But in our case, we would go to capacity, and certainly that's even a better result or circumstance. Define organic municipal waste. Well, you have here, it's source separated. So there are two bins in front of residential and commercial. You've got the blue bin where all the plastics and the recycling go to, and then you have the green bin where all the food scraps go to. Of course, you're going to get contamination. We usually don't take more than 5% contamination. Yes, you're getting some slight, even the compostable bags take time to compost. You'll get some plastic. You'll get, diapers, etc. But we depackage those as well in the front end, so we can depackage that. We use depackagers or pulverizers. But the organic waste is all we use. We don't use biosolids. Of course, at our composting facility in the aerobic process, we do mix it with leaf and yard waste, clean wood, and also paper sludge that we get from the paper mills. Again, source separated organics is the municipal organic waste stream from the collection of the green bin program. The Hamilton facility, once we're asked when that will begin processing. Once we complete the financing in April, it would take us 6 months to complete. So we do expect to start processing the organic waste in the first quarter of 24. We have bid for a municipality that's adjacent to our Hamilton facility. Their whole program is 16,000 tons per annum, and we are the closest facility to that municipality. So we look forward to winning that bid. And if we don't, we still have a significant amount of food scrap from food terminals and other industrial commercial sources. So we're very we have no concern with feedstock that's always available to us. And keeping in mind that the first year we're only processing 12,000 tons. Any additional tonnage that comes in, we would continue to process it and make further product. The other question is, what is the real market value for the combined real estate and the licenses? Well, that's a great question. So we have Colliers International evaluations on both the facilities of the real estate, but unfortunately, they can't give any value to the licenses because if the real estate were used for another purpose, like a toy factory, for example, they would have no need for the license. But the intrinsic value of those licenses is significant because you can't, for example, buy 49 acres adjacent to our Belleville facility and say you're going to open your own processing facility because you don't have a license. The ministry is not going to issue it to you. They only issue so many in a certain area, and there's a lot of criteria, and it would take about 10 years to get a license. It took us quite some time to get these licenses, and it stays with that real estate. So in terms of the market value, I mean, we've always believed that when we were trading at an $80 million market cap, reflected the true intrinsic value of the real estate. But we're not here to sell these assets. We're here to monetize them. Otherwise, we could sell the assets and be a vehicle with lots of cash in it. We want to monetize them, and we're seeing incremental revenue growing as more and more municipalities and haulers no longer want to transport the organic waste, driving 5 hours away to landfills when they can just come to our infrastructure, because our infrastructure too, the technology, there are no odors, there's no the air quality, etc. We meet all kinds of parameters that the Ministry of the Environment we have to comply with. The next question is environmental liability. Yes, of course, we have insurance on the facilities, but also the Ministry of the Environment takes in what's called a financial assurance bond. So, for example, at our facility in Hamilton, it's $637,000 that sits. It's a letter of credit that sits with the ministry for remediation. So, if anything were to happen. But we don't take in any hazardous materials. It's all organic, so we don't have too many issues with regards to environmental non-compliance. And the question is, do we have plans to expand to the United States? Of course, the acquisition is in the state of Florida. So the state of Florida is the ideal landscape for what we do. A significant amount of organic waste from agriculture and the growth of population in that state. And then, of course, the need for the fertilizer to go back into agriculture and to divert from landfill. I mean, one of the largest landfills I've ever seen is actually in the state of Florida. So that practice is no longer sustainable. Keeping in mind that landfills are not engineered to last forever. And they all have a lifespan, and many of them are coming to the end of their lifespan. So there has to be alternative solutions and more sustainable solutions for the organic waste. Again, yes, the United States, we are a fully reporting U.S. issuer. We're a Delaware corporation. So we will have facilities in the U.S. We wanted to build a model here, the strategic model and the actual facilities, the technology, the IP, and so on, the processes. This way it could be replicated anywhere in the world, really, but certainly in the United States. The next question is, can you borrow against the properties? Yes, absolutely. We have. If you look at our balance sheet, the debt on the balance sheet is all asset-backed debt. This is, mortgages on the properties, but they're very, the loan to value is very low. At the Belleville facility, it's approximately $5 million. At the Hamilton facility, it's $2 million. And yes, we could borrow but that would increase debt. We don't want to continue to carry that much debt. I mean, we're not a pre-revenue company. Obviously, we have cash flow. I believe this year we're going to generate close to $3 million. And that allows us to service the debt and continue to run the public entity, which is expensive with audit fees and legal fees, etc. Obviously, the underwriting will allow us to continue to execute on the plan, and also there are other developments and other potential operators that are looking to find ways to maximize their own capacity issues. Working closely with us. In terms of the Florida acquisition, it is. I've been asked if I can elaborate further. Again, we did announce that we were looking to acquire the company. Again, it's a cash and stock transaction. But it would be NASDAQ stock. They are generating revenue, and the acquisition is a one-time revenue purchase. So we feel there's significant value there that we're going to be able to unlock, and they have a significant amount of IP that we need and want to use. It relates to microbial products, etc. Again, when we look at some of our markets, and recently we announced a endorsement agreement with an iconic golfer. The golf industry is a significant industry for us. So our organic fertilizer was used at the golf courses, and because they're organic, there's no runoff, no chemicals. So it's a big market for us. We're starting to sell to that marketplace, and we also want, so that deals with the fairways, but we also want to deal with the ponds. So you're going to have green fairways and clean ponds. That's important for us. So that has to do with the acquisition in Florida. The next question is, well, will we be attending PDAC? No, PDAC I think is that relates to prospectors and mining. We're not involved in that industry or sector. With regards to carbon credits. So carbon credits are very important to us. It took some time. I mean, we're a company that actually, even our underwriters are impressed that we actually are able to monetize these carbon credits. I mean, you have people that talk about cap and trade and carbon credits, but no one really has been able to monetize them unless, of course, I always use the example, the obvious example, that's Tesla. But we're able to do so, and we actually got cash in. So what we do is it's a third-party auditor that comes in, verifies the amount of organics that we processed, that we diverted from landfill. There's a formula that's used, and then, of course, once they're verified, they're listed on the registry. That's the GHG Clean Projects Registry. It's a marketplace where then you can, once they're verified, you can market those carbon credits or the VRs, and you can sell them in the marketplace. So we did sell. We had verified 105,000 of those, and we sold 27,000 of those. We received a check for $192,000, I believe, in November. So it was a subsequent note in our September 30th 10Q. But you'll see it in our year end, this next March 31st, when we file our 10K. Again, we're now, not only are we selling the balance, we have about another 80,000, but we're also now verifying the 2022 carbon credits. So we're going to add those to the existing, and they'll be listed again on the registry. So you'll see those added. So it's more revenue for us. And that's a milestone, and it's just going to continue on. And when the second facility begins processing, we'll register that facility, and so on. We have the expertise now, and we are diverting from the landfill as part of the whole climate change initiative, and that allows us to, and easy for us to audit because everything can be corroborated. We have all the weigh scale tickets and invoices to the ministries. So easy for the third-party auditors to audit, and they are ISO approved. These auditors, it's a complex process to verify and to audit. So I'm down to a minute. I'll take one last question, and it is with regards to competition for feedstock. Feedstock, organic feedstock, there's a significant amount, whether it's from municipal organic waste, ICI, industrial, commercial, from restaurants and other larger, we get a lot of calls for expired foods from the Walmarts and the Costco's of the world. We take those expired juice boxes, etc. And of course, expired foods from the food terminal, like vegetable and so on, and agriculture. So not an issue with feedstock. We don't have an issue with that, with supply chains on that. So I'm pleased to say that there's no with feedstock. All we use is organic, the food scraps, no biosolids or manures, because we want to produce a certified organic product. So I've now completed the time allowed. I just want to thank everyone and say that without a doubt, SusGlobal is undervalued, and we anticipate, based on the developments over the next 12 months, to see an increase in our market cap.